Welcome to Money Matters TV. My name is Paul Mitchell. I'm a commercial banker. I'm your host for this show. Joining me with his co-host is James Chan of Asian Marketing Company. James, welcome to the show. Good to see you again.
Good to see you, Paul.
Did I get your title correctly? Asian Marketing Company is Asian American?
No, it's Asia, A-S-I-A. I somehow dislike the word Asian because it becomes too ethnic. But Asia is continent. So I don't know. I'm just making this up.
Sounds good to me. So you created that company. You're a self-employed consultant for many years, I understand.
True. I work for a large publishing company in New York, a Fortune 500 company, Harcourt Brace. And when the company decided to get rid of 75% of all its employees, I decided that it was time to do something else. And I actually was invited. I was in the minority, 25, being retained. But we had to go elsewhere, and I didn't want to go elsewhere.
So you started your own business? I mean, I've been with large companies myself, and I've been on my own for a period of time also. Of course, it was pretty hard to stay self-employed, at least for me, during the Great Recession a few years ago. And I ended up getting a job with Citibank and some other banks since then and all. But certainly the consulting aspect is something that most people with certainly, I think, a good bit of experience are qualified to give it a shot. And if you identify who your potential customer is quickly and get some customers quickly, then I think you're ripe to getting consulting. What do you think about that?
First of all, consulting is not for the timid people, for the people who are also pure dreamers. You have to be both a dreamer and a realist. It takes a long time to get good clients. It may take a short while only to be great clients.
What's a long time? What's a short time? A year? 6 months?
Long times, well, easily 3 to 5 years to get a good one. And it's harder to retain a client, meaning hold on to that client, helping the same client year in and year out. I've done that. I'm lucky. I'm kind of saying I'm not. I'm really saying this with some degree of clinical humility because it's real. It's very difficult.
Well, and you've known a lot of other consultants over the years. I know you wrote a book. You're chairman or president of a local association of management consultants, et cetera, et cetera. So you've seen a lot in different types of consulting.
I have. And it's not an easy thing. But on the other hand, the economy seems to be requiring consultants at all times, whether it's good times, bad times. So I think that the consulting business is going to stay, and it's going to be an important one.
Well, and employers frequently will like to have a consultant because it's easier than having a full-time employee with all the benefits and all the hands tying and that type of thing. You can hire somebody for a specific project or have them on retainer, and if you don't like them, they're not an employee. So see you around, bud.
That's the textbook reason, and it's primarily correct. But on the other hand, there are people kind of like me who want to do their own things and don't want to be company soldiers. I'm not a good soldier. I can fake being a good soldier if my boss is bad. And if my boss is good, somebody I like and respect, I will be a very, very good soldier, but only even then for a short while. I think that consulting really is for people, consulting meaning consulting on one's own, is for people who want to go solo or who want to be business owners.
One other aspect of it, though, it's probably the easier one, is people retire. They turn 65 or 68 or something like that. They have a lot of experience, know a lot of people in the industry. They can hang out a shingle. They don't necessarily need the income to live off of, but it's nice to stay involved and to feel like you're important and contributing, using your mind and that type of thing. You can hang a shingle and say, hey, commercial banking, you need a banking experience. You want to find a loan somewhere, call me. And if you don't call me, so what? But if you do, it's a nice gig.
That, again, on the surface makes great sense, but that it really isn't consulting. When the consulting I'm thinking of is full-time, hardcore, you need the income, you need to raise your family, and you have to send your sons and daughters to colleges. You have to go and beat up the bushes and get companies. It's not like, oh, I already have $2 million in the bank. It doesn't matter if I make $200. No, that is not consulting. That's hobbying, if I create a word for it.
Give us some other examples of some other consultants you've known, that somebody that did very well, why they did well, and maybe somebody that didn't do well and why they didn't do well.
I cannot name names.
No,
I don't
not
think
names.
it's fair
No,
to
no,
name
not names,
names.
but you can say in a certain industry,
It's
a
easy.
baker, a TV consultant, a television something or other.
Number one, the man or the woman has to have something special, knowledge and expertise. Number two, the person has to be really passionate in whatever he or she does. And number three, it's about perseverance. I'm not even talking about patience. I'm talking about persevere regardless, and also maybe the last number four is being creative. Yeah, if you don't have those qualities, it would be very difficult.
Creative, give me an example of creativity. as a
People want
consultant.
something new, and even if what you do is known by people and is useful, you still have to create from time to time a new angle, a way of describing what you do, a way of it's almost like writing a book, creating a dance, coming up with a new music. You know, the Beatles can't always sing, "I want to hold your hand forever." They have to come up with new songs. That's what I mean by being creative.
Would you say this is topical, being a political lobbyist, is that being a consultant?
Yes, even though I don't know what a political lobbyist does, but I think it has to be.
Yeah.
It has to be. It's selling knowledge, it's talking to clients, it's finding out what they want and giving ideas. Certainly it is consulting.
Yep.
Obviously.
So there's lots of different avenues there across the board.
Many. Consultants are like animals in a jungle. Just too many.
James, we have a question from one of our viewers that I'd like to see if you can respond to. It has to do with China, and you're an expert in
That's what
China.
I do, yep.
Exactly. The question is, are there some resources on the web or whatever that would be helpful to find out about doing business or about businesses and people in China?
It's actually a very good and practical question, whoever is asking this. There are 3 resources, and there is a slide for this because it's very difficult for people to remember Chinese names and websites. That's why there is the slide. The first one is Tianyancha, Tianyancha. Tian is sky, Yan is the eye, Cha is to check. So you have the big eye, which can see everything. Unfortunately, this particular company doesn't want to come up with a Western name, so that's why you have tianyancha.com. That's the first one on the slide. The second one is called National Enterprise Credit Information, and again, it's on the web. And the third one is called Qi Cha Cha. Of course, you have to know Chinese to say it this way. But without the tone, China is tonal. Without the tone is chi cha cha, chi cha cha. Chi is a short word for corporate. Cha is to, again, survey or investigate. So it's CHI, CH5 for Chi, Cha Cha, CHACHA.com. Now, mind you, these sites, you may have to get them and access them in China. I don't know if you can actually do it from America, so you may have to rely on Chinese-speaking people in China helping you. If you don't have any contact whatsoever, maybe you go to Dun & Bradstreet. Maybe they can help you.
Maybe the library.
Yeah. Finding company information in China is not easy.
So who puts together that information that is available at those websites?
The one in the middle on the slide is the Shanghai government. So it's a government-owned information is mostly government-owned, if not supervised.
So it may not be the most objective.
Yeah, well, maybe not. But on the other hand, you really need government support to do anything in China.
Okay.
So
there you go.
what can I tell you?
Yeah. That was a question from Victor Elm of Philadelphia.
Yeah.
So Victor, I hope that
Good luck, Victor.
gives you some ideas where you can go.
Not easy.
So if you have questions you would like to ask Money Matters TV, here's how you can do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back to the show. Now it's time to introduce our featured guest, Nick Yzzi of Yzzi and Company. Nick,
Thank you for having me, Paul.
great to meet you.
Hi, Nick.
Thank you very much.
So Yzzi and Company, I think you are an accountant in finance. You help businesses and individuals
Yes,
with those vexing taxes.
yes. It's
Ouch.
a different kind of year this year
Uh-huh. Different this year than more recently.
because it's the first time we're preparing tax returns under the
yeah.
Tax Cuts and Jobs Act
Sure.
It must
that
be
was
a riot.
initiated by President Trump. And it's somewhat difficult. It's surely not simplification, and it's surely not a postcard system.
Okay.
In fact, as we were speaking earlier, they tried to mimic page one as a postcard. And in order to do that, to condense the information that used to be there,
Postcard like this type of thing? Or?
it's still 8.5 by 11.
Oh, okay.
But they made it look like there's less information.
Oh.
But to accommodate all the other items that used to be on the tax returns, they added 6 more schedules.
Oh, boy.
So in essence, the returns are really larger than they were last year.
So we continue to have all these fun-looking, simple-looking words, which really is indicating a reality that becomes even more complex.
It has become more complex. And the other problem that you have here is that you have the tax law passed in December of 17. And when you get to significant items, particularly on the business side, like the qualified business income deduction, this new 20% deduction, the regulations, which basically interpret what the law's supposed to say, that comes from the IRS, the final regulations weren't issued until mid-December, and they were 200 pages. So not only did you not have the opportunity to know how to plan during the year, but you also have 2 weeks in which to try to catch up, and then as accountants and other professionals, they have to read all these things. So it becomes very difficult to do it retroactively.
The accounting industry must be having a field day because of these. I mean, because people need you, whether it's individuals or businesses.
Changes are wonderful.
And for that
Interpret them.
reason, who actually benefits from the new tax laws? The businesses or the individuals?
Well, I think as a general rule, the tax rates have served to lower the taxes for most people. That was the original intention. But there were a variety of other deductions, let's say on the individual side, that are no longer deductible, like tax prep fees, unreimbursed employee business expenses. If you're, let's say, a salesman using your own car, you're an employee, all those deductions
And
are
entertainment, no entertainment, right? No
entertainment is limited now. You can't do sporting events, but you can take a client to lunch and deduct that.
So
still.
meals are okay.
Meals are okay.
Okay.
50%?
Yes, still 50%. But the entertainment part, taking someone to a Phillies or Eagles game, that's no longer. So you
Or
have
a trip to China. How's
a
that?
trip to
That's
China.
a lot of
Yeah,
money.
that's-
Yeah.
you'd have to find a
Right.
real good business reason
Yeah, first
to do
class.
that.
Yeah.
But so I mean, I think, and there is some confusion about what happened to the law. Did the regular middle class people really get a tax cut? And a week or so ago, there was a lot of chatter in the news media that refunds are down. Now, you got to be careful when you speak about refunds because it doesn't matter whether the refund's down. It matters whether your total tax is down. So what happened, a lot of refunds are down, but it doesn't mean they didn't get a tax decrease because last February, after the new law was initiated, the IRS changed the payroll schedules so that you have less withholding taken out of your pay to anticipate the tax reduction. So what happened, many people got that tax decrease during the year in their pay, and now they file their tax returns and they're looking at this saying, hey, my refund went down by $2,000. What happened? Well, that's because they already have received that in their pay during the year. So I had a client recently that had $100,000 of wages, and they have in 17, $100,000 in 18. So you look at that, it was very comparable. Their withholding was $3,700 less in 18 than 17, but their tax liability was down. So they're getting less of a refund because they got more in their pay during the year.
Yeah.
So is it a washout?
No, it's still a reduction for most people from what I'm
Okay.
saying.
Oh, really?
But for some people, it's been an increase. It depends on a lot of circumstances. It could be how many children you have, okay? Because exemptions were eliminated. They doubled the standard deduction, but they eliminated exemptions. So for some people, with high number of children, they lost that $4,050 exemption, even though they may have picked up on the standard deduction.
Have you seen any reports about, well, since there's less taxes, so there's more money available for consumption, spending on the economy, helping the economy? Has that been an impact there?
I think there has been. I think the economy is strong. Just in the venue that I'm dealing with my clients, they seem to be economically in a better position than they were.
Do they hire more people?
I've seen that, yes.
Okay.
So it
Yeah,
seems
it's
to
been
me
more
that
profitable.
Your clients are likely to be businesses, at least small
Businesses and then the
businesses.
owners. I do
Right,
have
right, the owners and the-
individuals as well,
right.
but most of those are associated with a business.
Right.
But I think on the business side, this qualified business income deduction of 20% that applies to S corporations, partnerships, sole proprietorships, and also LLCs, that is going to reduce their taxes, and I think that has given them an incentive to do the things they weren't able to do when the economy was a little bit weaker.
What is this thing called the opportunity zone?
Opportunity zone is it could turn out to be something very beneficial to distressed communities. And the idea there is the government has designated certain zones throughout the country. And these zones comprise about 32 million people that live in these zones.
Wow.
And what they want to do is encourage outside independent developers to go into these areas and rebuild. It could be an apartment complex, it could be an office complex. So what it does, it gives a regular investor the opportunity to take a gain from another enterprise. Let's say you sold stock and had a $300,000 gain. You can take that gain, invest it in an opportunity fund, and that fund then is to be invested in the community designated by the government as an opportunity zone.
But somebody has to come up with that fund.
That's
In
right.
other
You have
words,
to have
you
have to have an investment company,
Right.
an entrepreneur to be able to do that. But the tax benefits are pretty unique from the investor side. So if I have a gain of $300,000 that I want to invest in an opportunity zone, if I hang on to that until 2026, I don't pay that deferred gain on that original sale that I had. If I decide to stay in that investment for 5 years, I get a bump up in my cost basis of 10% and actually reduce my tax liability by 10%.
So do I invest in a fund, and that fund then finds developers or whatever to give money to, or lend money, whatever you call it, to develop something, or is the fund
Yes.
actually the developer itself?
It could be both.
Good question.
Yeah, it could
really
be both.
good question.
Yeah,
Oh,
it
a
could be both.
developer doesn't necessarily mean an investor.
No,
right?
the
The two
investor is
are-
the one that's going to defer
Can
the
be
gain.
separate concepts.
Yeah, it would be the business company that's going to go in and build a facility here
Right.
in a distressed community. And it could be like there's one company in the Philadelphia area that wants to build low-income housing because they want to put back something into the community. It's not that they want to build a big apartment complex, high-rise, luxury type things, which could have an adverse effect on that community. That's been happening as well in different parts of the country. So you don't know how it'll work out as far as the benefits to the community. They use a couple terms. They use one called agglomeration. And basically what that is, they feel that the benefits of bringing in these pronounced improvements to a community are going to spill over into that community in the form of jobs and other enhancements.
Maybe a shopping center or supermarket in,
That's right.
in an area that doesn't
That's
have
right.
a real supermarket.
That's
for
right.
example. Yeah.
So to go on, if you stay in this for 10 years, you actually have no tax on that original deferred gain. If you had a $300,000 gain, you stay in there 10 years. Now, is there a guarantee you're going to make money or lose money? No, there's not. Like any investment, you don't know. But
How do you know you're going to stay in for 5 or 10 years? You can get your money back from the fund, or you have to wait for the fund to do
well,
something?
if you get
or
out,
to
if you
cash
get out
or-
early, then you have to pay that original deferred tax.
What could be a perfect storm in the bad sense? If you invest $300,000 and you're thinking of keeping it for 10 years, can you lose the entire thing? What could happen?
It's possible.
So you
Sure,
should-
if
like
there would be
what?
something
Like a-
catastrophic in that original investment, it didn't go well, I think it's unlikely because the people who are going to be building these facilities are people who've been in business for a long time. They're the major developers.
But still, I mean, if some promoter type person or whatever raises a fund, you should check with a professional advisor that has more experience with those types of things
Yeah.
than you do. That's
Yeah,
my
and you
recommendation.
can go through your brokers and other professionals like that to be able to figure out. So you have to do the homework. You know, it's not a shoo-in.
It's not a government protected or
No.
you know like one of those.
Guaranteed, yeah.
No,
yeah,
the government is putting
guaranteed,
this in the
like a-
hands of private industry
Right,
and
exactly.
saying,
So, all
you go
right.
out and
Yeah.
improve that opportunity zone. So,
How about other tax thing we've been hearing about is the state taxes, this Wayfair thing. What's Wayfair? Wasn't that
yeah,
a
Wayfair is a Supreme
website?
Court. Wayfair is a retail seller, a large online retail seller. I'm sorry.
Furnishings, I think.
Yeah,
mostly.
it's mostly furnishings. And they were challenged by South Dakota for the sales that they made to South Dakota residents, and it went up through the system, went to the Supreme Court, and in June the Supreme Court came out with their decision. The original decision way back, and the precedent was the Quill case. In essence, it said to Quill, that sells office supplies, as long as you don't have a physical presence in a state, you don't have to collect sales tax to a buyer from that state. Okay, so they're in Illinois. So if they sell to me in Pennsylvania, as long as they don't have facilities in Pennsylvania,
Right.
they don't have to collect Pennsylvania sales tax. And that's the way it was for a long time. That was called physical presence or physical nexus.
Right, yeah.
What the Supreme Court case decision did was overturn that and say, because times have changed. 30 years ago, you didn't have online sales,
No.
or very little.
Yeah.
But now it's predominant. So what the Supreme Court's case said this time is that physical presence is not necessary as long as there's economic presence or economic nexus. So in essence, if you're a large online seller, you theoretically now have to collect sales tax. The sales tax in the state in which the buyer lives, you have to collect sales tax on all those sales.
50 states.
Which means
Could be
that
50
the
states
ship
and
to
DC.
address is
That's right.
important.
Yes. And Amazon, even before the decision came out, decided that they were going to start to do that anyway because I think they could see the handwriting on the wall that the Supreme Court case was going to go in that direction. So, you know, if you file when you file your Pennsylvania return, and this happens frequently, people go outside the state to buy something. In fact, I just heard an advertisement on here on the way down about buying something in our state and you don't have to pay sales tax. Well, you do. When you bring it back into Pennsylvania, if you didn't pay
Delaware.
sales tax,
Delaware.
you go to Delaware, you buy whatever you're buying, you bring it back into Pennsylvania, you have to pay use tax, which is the same amount of sales tax. And on your Pennsylvania PA 40, they ask you, did you buy taxable sales in a state that you didn't charge sales tax to, pay
Gee,
sales tax for?
I forgot. I don't know.
And well, most people say no, but it's not the right
I'm
answer.
sure you can write a PhD dissertation.
So even on the
on
individual
this.
side, you have that same theory. The part about this whole nexus thing is that states are jumping on this and they're saying, not only are we going to interpret this as sales tax issue, it's going to be an income tax issue as well, and that could also be a compliance nightmare for small business. So Pennsylvania has an exemption for a small business online seller that as long as you don't have more than $100,000 worth of sales, you don't have to worry about it if you're outside Pennsylvania. But so it remains to be seen. This thing's going to grow legs as it goes on.
Does it apply to services, not just commodities? Services, meaning you
no,
sell
it's
service
tangible property.
online.
Consulting
Now, right now,
services.
it's tangible
I
property.
teach you Chinese
Yeah.
service,
Not
rather
ser-
than
no.
selling you a Chinese-made furniture.
Well, it depends on the state in
Right.
which you're providing the service.
Right.
But this particular case had to do with tangible
Okay,
property.
tangible,
If you
touchable
If you
products.
sell them the book or the
Yes.
tape,
Yeah. Right.
There you go.
Oh, yeah,
Yeah.
right. Yeah, I sell him through Kindle, yeah, whatever.
how about this
Yeah.
insurance tax
Yeah.
if you don't get health insurance? Is that still alive these days?
Well, it's no longer as of January 1st, 19, but for those who are filing tax returns for 2018, the individual mandate penalties still apply. Now, most people think in their head that it was eliminated,
Right.
but it was eliminated starting this past January. So it's still applicable.
Yeah, yeah. How about some other significant things for businesses?
Well, for businesses, there's a variety of things. We talked about the 20% deduction, but
Oh, how about businesses kind of selling overseas? Do they get a break? Do they, in other words, companies that are promoting American-made products, selling them overseas, do they
yes,
get an
there
advantage?
are incentives too for that under the new law. I don't deal with the foreign stuff.
Right.
I deal with
But
mostly
you
small,
feel
medium-sized
you feel
business.
that there
yes,
is.
yes,
Okay.
there is. But on the business side, there's some things that go both ways. I mean, like-kind exchanges. If you trade in a business vehicle
yeah, that's
or a
right.
piece of equipment, in the past, you didn't have to pay tax if you traded it in. Now, like-kind exchanges don't apply unless it's real estate itself.
I see.
So if you bought a truck, you fully depreciated, or a large piece of equipment, and you now trade it in, that trade-in value to receive is going to be taxable gain. So that's a negative on the business side. On the corporation side, for a regular corporation, a C corporation, this is mostly larger corporations, they've reduced the rate, the top rate to 21%. It's a flat 21%, where it used to go from 15 to 35%. And because of that, to try to give a parallel economic benefit to small business, that's why they incorporated the 20% qualified business income deduction to sort of level the playing field between small businesses, and the larger ones are going to get a lower tax rate at 21%. So there's been a lot of things there that have helped. There's some other things like net operating losses. There's limitations there. You can only deduct 80% if you have a loss. You can no longer carry it back 2 years. You can carry it forward. So on the business side, what they did was they gave this 20% deduction to the small business, to the pass-through entities. They lowered the top tax rate to 21% for the larger corporations, but they took a lot of other things back. So in essence, some of the benefits are not as large as you might think to business itself, whether it's large or whether it's small. They did increase the expense election and bonus depreciation. So if you buy a piece of equipment, you can theoretically deduct it all in 1 year if you want to, either under Section 179 expensing or under bonus depreciation, depending on different thresholds that are built into the law. And then they also changed the law with respect to building improvements. And in essence, instead of depreciating certain building improvements now over 39 and a half years, what they allow you to do is to either do it over 15 years or maybe also, if it's qualified, to do that in 1 year.
Wow.
So that has been good for leasehold improvements and restaurants and things like that.
Have all the regulations been written, or are they still being written? Are there still things that people are going to have to be surprised by, or you're going to find out about and advise your clients in the next 3 months? Or?
There's still going to be regulations written, except the number of regulations has been curtailed by the president.
Yeah.
So they're trying, but they had to do it on this law because, particularly on some of the more significant issues where there were a lot of questions. And it seems like that some of these provisions were written in haste, and it produced a lot of questions, and some of the stuff didn't really make sense from a tax perspective. So it's been very confusing.
Can they be changed in a few years and then come back? Therefore,
Sure.
we will have more chaos.
Everything can be changed, but if the administration changes 2 years from now, a lot of this is going to change as well.
Okay.
So it sounds like it's another situation of best to see your advisor. See your advisor often. Don't assume anything's going to last forever.
Because taxes have become political.
Yeah. Nick, thank you very much.
Thank you.
Great having you on
Thank
the show.
you for having me. Thank you, Paul. Thank
Good
you,
seeing
James.
you.
So our next guest will be Jeff Zasloff of Blum and Zasloff, and that'll wrap up our show. And just remember that on this show, your money matters.